So you want to triple or quadruple your money on Tesla, Amazon, or Virgin Galactic, but you don't have the tens of thousands of dollars required to do it. Well, good news, there's an option strategy that will let you do that, and it's called the Broken Heart Butterfly. So what this trade is a defined max loss play that allows you to potentially triple your money in about a month's time. So let's go ahead and jump into this real quick. So I pulled up Tesla, and this play, I'd say give it at least 30 days or so. So I'm going to choose the March 25th expiration date. And what you're going to do first is you're going to sell a put, and that's because this is a neutral to bullish strategy. So you're going to be selling a put, and you want to choose a price where you think Tesla's going to be above at expiration. Now, you can choose higher up if you're really bullish, but I'm just going to say it's going to be above where it is now. So I'm going to sell the 855. Now, if this was a naked put, you would need 100 times the strike price in order to secure this position. So that'd be $85,000 and $500. But because we're going to be turning this into a spread, you only need a fraction of that. So I'm going to go down a couple strikes here, and we're going to buy the 840 put below it. And this, oopsie, sorry, that was a misclick. You're going to buy the put below it, the 845, and you see it looks like just a normal bold put spread where your max loss is defined, and then your max profit is defined over here too. Now, what we're going to do is, because we're getting a credit, we're going to go ahead and sell a bear put spread above that. All right, so what we're going to do now is pick a price that we think it's going to be below. I'm going to say it's going to be below 915 at expiration. And we're going to go up to that price, and we're going to sell that. And then we're just going to go like one step above and buy the put above it. So now if you look at the P&L, we get a really neat scenario here, where as long as Tesla goes up by expiration, we're going to make a profit. If it finishes between our two short strikes, 915 and 855, that's where we make max profit. If it goes above our short strike, we're still going to make a profit, but it's going to be a little bit less. And you can see that our max loss is 355. Our max profit is 645, which is times 2. So you'd be tripling your money. And if it just shoots through your entire bear put spread, you're still going to make money. It's going to be about 50%, so 150% return on the investment there, which is pretty cool. Now, what we're going to do is we're going to go to the OptionsStrat.com. And this is a really neat site that lets you see the P&L over time. So I already pulled up Tesla here and have it set to March 25th. And what we're going to do is set up the same thing so you can see the P&L in this view. I'm going to sell a put. And what's neat about this is you can just go ahead and drag this to where you want it to be. That happens to be what we sold, so that's awesome. Then we're going to buy the put. And this one we said was 840. And you can see like it calculates everything as you put it up, which is really neat for trying to visualize these trades. Now we're going to go ahead and sell a put. This is the one that we sell at 915. Then we're going to buy the put above that, 920. And you can kind of see how this play looks as it goes over time. And at any point that Tesla goes up, you can turn around and just lock in the gain that you have right here. So if Tesla shoots up to like 950, well, obviously your max profit is 370. But if this happens on February 25th, you can close it down for 225 and call it a day. So you can close this out early at any time that you're winning on the trade. So your max loss on this play is $630. Max profit is $870 according to this site. Now, something else you could do is you could play around with these strikes to see what it looks like when you do different stuff. So if you just do $5 wides, your max profit would be $410, but your max loss would be $90. So you're quadrupling your money if it fits between these ranges. And you can play around with how you put these up. So in this one, as long as it stays below 950, you make some decent money. Let's go ahead and look at Amazon. So this is a play that I was looking at as well. And you can see max loss on this one would be $855. Max profit is $1645 if it stays between where it is now and $3,200. So you can make almost triple your money on this play. And if it shoots up, which I think Amazon will, then at worst you're making $145. But if it goes down, that's where you can see that like your losses come in pretty quick, and you really need that Vega move to go up, or the price movement to go up in order to make a profit on this trade. And if you don't want to deal with bigger tickers, this also works on smaller things. So even Virgin Galactic here, you can set up a trade that's similar. So in this example I have here, we're bullish on Virgin Galactic, saying it's going to be above 10. It does have earnings, I think, on Tuesday this week, so that's why you have some inflated premiums. So if you think Virgin Galactic to go back up above 10, this might be a play for you. So basically, your max loss on this play is $8, but your max gain is 42. I'll let you do the math, but that's a pretty nice return. So this strategy is called the Broken Heart Butterfly. I know it says long put condor over here, but it's the Broken Heart Butterfly if you want to learn more. And I hope you guys enjoy this video, and good luck next week.